Hello, guys. Just giving it a few more minutes to wait for a few people to join. We are live. Just hanging tight. Might be a good idea to grab yourself a hot beverage, get your notepad ready. We'll just give it a couple of minutes. Just waiting for a few more people. There's quite a large number of attendees today, which is good. I can still see some people coming in. I'll get another minute, and then we'll get started. Excuse the noise in the background. We've still got some staff in the office, so you might hear some people typing away. There's lots going on in our office this week, and as we head towards breaking up for Christmas, so just getting a lot of late nights, which can be normal in this business, but it's all fun and games. So let's give it another minute and I'll get started. Okay, that's a minute. So let's get started. Good evening, good morning, good afternoon if you're watching this on replay at whatever time it is. Welcome back and welcome to the last webinar of the series. I hope that you found last week's webinar useful, and well, all of the webinars in the series. Last week, we spoke about compliance and preparing your property to let out using the rent-to-rent model. So, so for those that don't know who I am, well, you should know by now since this is the last webinar of the series, unless, of course, you've decided to tune into this webinar before watching any of the previous episodes. If you are, then come on, guys, you need to treat this like a box set on Netflix. You can't just watch Game of Thrones halfway through the season. I mean, to be fair, I haven't even watched a single episode of Game of Thrones, by the way. Terrible, I know, but I hear it's good. I hear good things about it. Anyhow, so for those that don't know, let me quickly introduce myself. I am Kenny Sahota, and I'm the founder of 3 property businesses and founded a foundation where 10% of our profits go towards helping homeless people getting off the streets and into an income, starting with London. We have about 338 units, 220 odd of these are rent-to-rent HMOs. I can see some new faces on here, which is nice. Nice to have you on. For the people that for the old faces, welcome back. Our main business focus is converting commercial real estate to beautiful, homely residential homes, with creating a great community in mind for each project. Whenever we take on a project, it's never about just adding value for profit. We need to serve some sort of purpose or provide a positive change to the community. So anyway, that's me. I'd like to warmly welcome you to the last episode of the webinar series about the rent-to-rent property strategy. Welcome to the people that have just joined. You haven't missed much. It was just a quick introduction. For those that didn't get to watch the last webinar, it is available to watch on replay. I do hope that you have watched those before watching this webinar, because bear with me, there's still more people coming in. I'm just admitting them. Cool. So what was I saying? Oh, there's more people coming in. Just give me a second, guys. I'm just going to give it a moment for these people to come in. There's more and more people being added. Okay. So for those that are joining in later, just watch this on replay if you're interested in. All I've done so far is done the introduction. So there's more people. There we are. Okay, for those that didn't get to watch the last webinar, it is available on replay, as I mentioned. The webinar link should have been sent out to your email. Just be sure to check your junk folder or your spam folder. Alternatively, you can probably find a video on our Emily Property London YouTube page. Just quickly, if you can't hear me, just make yourself known in the chat facility. I don't think you should have any issues, but it's something we do every webinar, just in case I go on and do this webinar without anyone making themselves known. Just make yourself known, actually, if you can. And the best way to do that is there's a chat facility. If you can't hear me, just let me know. I'll give you a second to do that. I don't think anyone should have any problems. Adam, I know you've used the this chat facility before. If you can hear me, just let me know. At least I know everyone else can hear me fine. No, it's not just audio. It's you should be able to see some slides. Can someone just let me know whether they can see my screen? It should be like a black slide that says systems and scale. Perfect. 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 Thanks for confirming. Thanks for confirming. Okay. Problem solved. Lovely. Right. Let's crack on. We've got a lot to cover, and I'll just crack on. So thanks for letting me know. So let's do this. As can be seen from the title of this slide, the webinar will be related to systemizing your business so that you have clarity and structure in your business. There are so many benefits of systemizing your business. We'll tell you exactly what they are during this webinar, but we'll also share with you how to scale your property business. Scaling your business is where you go from 1 or 2 properties to 20 plus. In the very first webinar, I asked you to write down what your ideal income would be after a year. And if I remember correctly, the average seemed to be around £2,000 to £5,000 per month. After year 1, and you're in that position to start scaling, you can times those ideal amounts by 10 or 20x per month. In fact, with scaling, there's no limit. That's the beauty about it. You can define what your limit should be. So it's my favorite part. So in the previous webinar, I would have touched based on this blueprint. This is a framework I've created to illustrate how I operate my businesses, and I've done so over the last 11 years. It's a framework. The framework has 3 main components. Each component you need to treat like a machine. You have the sales machine, where you have a constant flow of new business coming in. The next is your systems machine, or your day-to-day management, focusing on the delivery of your service or your products. And finally, you have your scalability machine, where you focus on monitoring and analyzing key data in your business that allows you to grow and flourish your business, or even discuss exit options. And in this webinar today, we're going to cover the scale machine component of this framework. However, there was a lot of system components that I didn't get to cover in the last webinar. To be fair, it's quite linked and suited to this webinar and ties in nicely with the scalability machine. So we'll cover a lot of the system stuff that I didn't cover last webinar, as well as the scaling. It really does tie in quite nicely together. So you guys are in for some good value today. So here's the agenda for today's webinar. I mean, it's 6:45 now. I reckon we should be able to fit this webinar within 1 hour. It probably will run over, guys. Just to set your expectations, I'm hoping to be done quite quickly so that everybody can do their usual evening duties and have dinner on time, or catch the episode of EastEnders. But I think we should be fine. First, we'll talk about the day-to-day management in your business. I'll give you an insight into what you'll be doing, whether you have 5 properties or 20 properties. These are things that you need to do regardless of the number of properties that you have. The time for each of these tasks, of course, vary depending on the size of your portfolio, but I want to drive this point into your minds that you need to be doing this to be successful in any property strategy. What you will be doing more of, however, when you start out is, actually, you tell me, guys, based on what I've spoken about and the blueprint we have, when you start out, what should be your number 1 focus? Let me know, guys. Just try and guess in the chat facility. Just tell me what should be your number 1 focus in business. The answer to this should be your number 1. It should be your It should always be your number that you focus on until you bring in staff to take this away from you. So just tell me what that should be. So we've got some people here. We've got people saying marketing, some people saying growth, systemize, customer satisfaction, brand awareness, all very valid points. I think out of all of that, the answer, well, I've got service. This is all valid points. They're not wrong answers, but I think the question I'm asking is, what should you prioritize? And when you're starting out, you've got no cash flow coming in. So I think, Adam, you were the closest. Growth. Your number one focus should be sales. It should be sourcing property. It's literally picking up the phone and making sales. Your number one priority when starting out is pick up the phone to agents and sourcing deals. You won't make any money until you source and close properties. This day-to-day management I will be discussing also needs to be done, but this is where time management is a skill set that you'll need to master in your business. We'll then go into some important learnings around systemizing your day-to-day management. You want to automate as much of those tasks and also delegate by having a team around you. Sourcing and closing. What I mean by Adam, just there was a question there that says from Adam from you said source and closing, as in get rooms. Not necessarily, no. What I mean by sourcing and closing is actually winning clients to then be able to rent out the rooms. So you need to get those clients in the first place to then convert the property to whatever you want to convert it to, whether that's service accommodation or HMO or whatever. That's the sales component that I spoke about in the first webinar. Save your questions, actually. If you've got any other questions, just write them down, and there is a Q&A at the end. Next, we will talk about scaling up your business. Everyone wants to have a great lifestyle and reap the rewards of their hard work. And you can only do that when you reach a minimum number of properties, depending on the lifestyle you want. And at the same time, you don't want to be consumed in your business. We all want to start a business so that we have more time freedom. Don't start a business if you are looking to just work in your business like a normal job. You want to eventually detach yourself from your business, which will then tie nicely with you thinking about the exit strategy. Asking yourself, why are you doing this? What is your end goal? What's your light at the end of the tunnel? And then we then work backwards from that, so you have a specific destination to reach. So yeah, that's and of course followed by the live Q&A. Lots of content, so I hope you've got your notepads ready. You'll need it. So let's crack on. Let's start with the day-to-day management. So what's involved with your day-to-day management in your property business? And this isn't specific to rent to rent. You would apply this to even properties that you own and any property development business. So I'm going to briefly tell you what's involved, and then we'll go through each of these in detail. Firstly, it's sales. However, I won't go into detail about sales. Just refer to the first webinar of the series. But as I mentioned before, you want to spend the majority of your time on this aspect. And you need to treat your time as very, very valuable. What you need to do on sales, what is the absolute end objective in business, especially when thinking about a business to survive? The number one objective is cash flow. And you need cash in order to survive. So what you need to do is ask yourself, what tasks are you doing? Is this particular task going to bring me cash flow or get close to it? Hence why you should spend most of your time on sales. Just to reiterate on that sales aspect. Anyhow, just refer to the first webinar in the series because we've covered that in quite great detail. Next is your accounting duties in your business. For the love of God, Do not rely on your accountant or your bookkeeper if you outsource to them. Take responsibility and be held accountable for the financial duties in your business. We'll cover this in good detail. Of course, when you start to close your first property or more, you'll then need to service your landlords and tenants who are both your clients now. Maintenance issues will crop up, plumbing, electric, etc., and you'll need to intervene and take care of this, providing a fantastic service to your clients, handling the stress of this so that they don't have to. It's the exact reason why they've signed up to you in the first place. These are your usual property management duties. Of course, I'm not saying you need to get your hard hat on and bend over to repair a toilet yourself, showing your bum crack. There are experts that you need to rely on who instead can show their bum crack. So anyhow, taking on properties is one thing. Dealing with the ongoing maintenance is another. But as you scale up, you need to ensure you still have eyes in the property to ensure the standard of the property is upkept, and inspections are the best way to do this. So that's another day-to-day management task. I'm not saying you have to do this every single day, but it's just part of the whole management process. We'll go into details about renewals and how to best handle this, something that's definitely part of your day-to-day management. And then we'll go into detail about arrears and evictions and how to stay on top of this. But most importantly, how to take emotion out of the process and simply rely on your procedures. So, accounting. What's involved in the process of accounting for your rent-to-rent business, or even applying this to any of your property strategies? Firstly, every business needs to submit something called the year-end accounts. Now, apologies to those with experience. I'm assuming that there's people experienced and people not so experienced, so just bear with me. Every year, you and your accountant will need to submit your yearly accounts to Companies House. Every year, declaring your income and your expenses and obviously revealing your profit and loss account. Secondly, whether you have one property or two properties, you need to have a process of reconciling the rental income. So what do I mean by reconciling or reconciliation? Reconciliation, just bear with me here, is the process of comparing internal financial records against monthly statements from external sources. So reconciliation in this case is used to ensure that your records of rental payments match the transactions in your bank statements. It's at this point whether you know a tenant has missed a payment, paid late, or paid on time without any issues. Very, very vital. The same applies to business fixed expenses in your business. These are expenses such as your telephone line, your office rent, if you have a premises, your staff wages, salaries, director's wage, etc. You need to reconcile these and apply the correct account type, or in simple terms, account type basically means a category known to HMRC. Printing, advertising, these are categories that you categorize or reconcile against. Another accounting task is, of course, paying the invoices that are sent to you. So if a plumber is instructed to attend a property to fix a leaking tap, for example, they will send your business an invoice for the job once the job is complete. They will probably want to get paid straight away, but as you grow, you will systemize this part and pay them 30 days, or you might pay them in 30 days or on a single date every month. It keeps it clean and simple that way, but from an admin perspective, it keeps it simple in the way of from an admin perspective, but it depends on who you use and the size of your business. Now, the smaller contractors, they tend to want cash. They tend to want payment as quickly as possible. But there's larger size companies that will charge a bit more, and they're happy to have a 30-day lead time of payments. The other thing you want to do from an accounting perspective is send your clients, landlords mostly, a monthly rental statement detailing that you've paid them XYZ on a particular date. With regards to tenants, there isn't a requirement to do that unless tenants are paying you weekly. Best to keep it simple with just monthly payments, though. That's what we do for tenants. I'm just checking to see whether you guys can still hear me, because someone else has just reported that sound has gone. Just testing. I've got full internet connection. I can see that my microphone is picking up sound. So I don't think it's on my end, Alex. It could be it could be on your side. If anyone else can't hear me, just let me know in the chat facility. I've got the chat facility open. It's something that I'm reading while I'm doing these slides. So any problems, just let me know. Yeah, good idea. Just when in doubt, hit the restart button. Okay, where was I? So with accounting, the only other nugget I recommend is to have all payments come and go on the same date every month. It makes life so much easier. The reality of doing that might be a bit harder if you don't start out doing it. So if you're in a position where you're just starting out, try and have tenants pay on the same date every single month. So if you've got a tenant that wants to move in on the what's the date today, the 13th or 12th of December, what you do is you get them to pay up until the 1st and have every tenant pay on the 1st in full. That way, you only have to check your accounts once every single month. So let's move on to maintenance. So this is another area of day-to-day management of your property business. There are usually two types of maintenance reporting that come your way as the property manager. There's emotional and there's actually repairs required. So what do I mean by emotional? Well, let's take a HMO as an example. Remember that people are living in a house share, meaning they will need to learn to live with each other. I don't know if anyone on this webinar lives in a house share or has done so in the past, but emotional issues that come your way can be related to when someone has an issue with someone else in the property. It could be a cleaning problem, or it could be a personality clash, whatever. We try our best to deal with this, but you do need to remind tenants that they are adults, and just refer them back to the rules set out at the very beginning. Last webinar, I spoke about providing a welcome pack, and that welcome pack usually is the best time to talk about rules living in a house. Repairs are issues that can be taken care of relatively quickly most of the time, i.e. leaks, quick repairs, appliances, etc. So that's the difference between emotional issues versus actual repairing type issues. The next thing you need to do as part of maintenance is when tenants or landlords raise anything to you, you need to acknowledge and provide some sort of response. No response means they will keep bugging you and thinking you're ignoring them. It will lead to them thinking negatively of your service. It sounds obvious, I know, but trust me, when you start doing this and you're scaling up, you will start forgetting this stuff. And if you don't do this yourself or train your staff to do this, you're setting the wrong type of example. So if you know this stuff from the start, and we'll talk about how to do this and how to implement this as a system in your business later on, but it's really vital that you not only acknowledge tenants and landlords, but also have some sort of what we call SLAs, service level agreements. So if there's a particular issue that's an emergency, tenants know that we're going to respond to them within a certain time. And this is all explained to them upon the move-in. Troubleshooting is something you will get better doing over time, unless, of course, you're savvy with household DIY. Now, if you had an issue when sending a contractor out, it's likely that that issue could be so small that it wasn't worth sending the contractor out. And they might charge you some call-out fees. It could be something you were able to do, or you're able to get the tenant to fix over the phone, which saves you that call-out fee. So the key point about troubleshooting is when tenants report issues, you want to be able to work out exactly what the issue is and determine what to do next, i.e. whether you send out a handyman, plumber, electrician, or whoever. One example of an issue is drains being blocked in a sink. And this is something that can be resolved by the tenant using a plunger or drain unblocking chemicals, just to give you an idea. So it's not worth sending a plumber out who's probably going to charge you 60 to 90 quid call out charge when the tenant could have saved you that money, but just by following instructions. So whenever repairs come through, you want to try and troubleshoot over the phone. It's like when you call, everyone has broadband in their houses now, and whenever you have any issues with your broadband, the first thing you do is you call whoever the supplier is, whether that's Virgin Media, etc. And the first thing they do is to try and troubleshoot over the phone with you, and it's usually a reset that fixes things. But that saves them sending an engineer out, which is a cost of resources to them. So it's the same thing with you. So the next logical step is to arrange for the contractor, if needed, to be sent out to repair the issue. Of course, they'll need access, so some logistical planning will be required to either have tenants available to let the contract in, or with permission, provide keys to the contractor to gain access, or ever you accompany that contractor yourself. So the next part is the logistics. That's really what you'll be doing on a day-to-day basis. Initially you, but of course you want to have a team to do this for you. Each step of the way, you want to ensure your communication is very good with both your landlord and your tenant. This will prevent any arguments or complaints. A tenant's view of renting is that they are paying rent and they expect the service to live in a fully functional property, and rightly so. They are in their right to think that way. The reason why we are saying to communicate to landlords is because some repairs may need to be covered by them from a cost perspective, depending on what you negotiated from the start. Therefore, you need their go-ahead on any repairs that need to be paid for by them. Plus, it's another way of winning some brownie points. So if you've got a problem that you're taking care of and you're just simply calling that landlord and say, oh, this has happened, but we've already taken care of, that landlord's going to be chuffed to bits. So let's, the typical day-to-day management task. Inspections is also another typical day-to-day management task. It's all well and good signing properties and closing deals, but we have the duty to ensure these properties are well upkept, and it's always good to check in with the tenants every now and again to see how it's going. So the first thing you want to do with that is create a checklist. This will standardize your processes, but also ensure you haven't missed anything, but also ensures you have a record of your inspections. Usually before tenants move in, you want to create an inventory. Just for those that don't know, an inventory is a report you and the tenant sign that states the current condition of the property and furniture upon them moving in. The report confirms that you both agree what the report states. So on inspection visits, you can compare the condition against the report for any intentional damage, basically. So it gives you something to have legs to stand on, to say, hang on a second, this property was provided to you in this condition and look what you've done to it. And it's at that point you can then start deducting these sort of things from the deposit for the cost of the repairs. So there are two types of inspections you can do. One is just a common area inspection. If your property has a common area, it doesn't necessarily mean just a communal area. It could be the kitchen as well. Every property will have a kitchen. Um, you won't need to organize that with the tenants as because you can have direct access with your set of keys in, for example, a HMO property. It's a great opportunity to be proactive with any disrepair as opposed to relying on tenants to report issues to you. So definitely want to have a common area inspection for your properties. The second type of inspection would be the individual tenant rooms inspections. It's a great opportunity to check in on your tenants and see how they are doing. And it's an opportunity to discuss renewals, which is what we're going to next. It is actually what we're going to next, which is good. So what do we mean by renewals? Renewals are when tenants move in, you usually get them to sign a 6-month AST, a fixed term AST. So AST is a short hold tenancy agreement. It's just an agreement between you and the tenant. It's a contract you have that you agree for them to live in the property for 6 months to rent. After the 6 months, after the 6 months fixed term, you are automatically the contract is automatically turned into what's called a periodic tenancy, which acts as a rolling contract. Just FYI of what ASTs are. So that's fixed term contracts. What you want to do is have a record of the start and end dates. And you want to be able to call these tenants 2 months before the end of the tenancy. So where we at December, let's just say I get a tenant sign up in January. It means that we'll end in June. What we want to do is call them around April time to see how it's going. And you can ask whether they're happy and want to stay or whether they have plans to go elsewhere. It's at this point you can be proactive and get your next tenants lined up so you can reduce or not have any void periods. So that's how you can reduce your void periods. We're very good at doing that. We generally have a tenant move out and we have a tenant lined up always, and we do those viewings during the tenant being there. There is a risk that the room is not going to be clean, but we'd rather be proactive and have tenants lined up. Generally, what happens, the tenant moves out, we get our cleaner in to clean the room and have the tenant move in the next day. So there could be like a half a day or even a full day of void, which isn't too bad. It still means that you get paid your for the room in that month, so you're not really losing anything. The other area in your day-to-day management within your business is dealing with arrears and evictions of tenants. So what are arrears? Arrears are simply put when tenants don't pay you when rent is due. Sounds obvious, but just for the sake of clarity. Now, obviously, because you're paying the landlord a guaranteed rent every month, you need to be all over this and have maximum control so that you're not out of pocket. Doing your rental reconciliation as soon as possible will identify the non-payers before it gets too late. Now, when you've got a tenant that isn't paying, the best way to deal with it is not to scare your tenant away so that they end up becoming uncontactable. You don't want them to do a runner. In our business, we have a set procedure for that, so that we follow. But we also like to be approachable. So when tenants move in, we always ask them if there are any issues with paying rent, and to let us know in advance so that we can help accommodate them. It just makes a huge difference. It means they will tell you in advance whether they can or can't pay rent, and at that point we usually ask them, okay, when can you pay, and we just keep a note of it. I mean, the first thing you want to do is not jump to conclusions as well. The best thing to do is call a tenant straight away. It could be an oversight on their side, or maybe they've had an expensive month, or have intentions to pay later. Whatever the reason, let them explain this to you. That's the only other thing I'd add to that. From time to time, tenants can be unreachable. So if you try calling them, sometimes there are times where they become unreachable, and thus you have no choice but to follow the legal eviction route. There's two ways of doing this. You could do it yourself. If you want to do it yourself, you need to know the process and ideally receive some sort of training on it. It's cheaper to do it that way, but any mistakes, it would mean that you would have to start the whole process again, which can be a huge time delay and very costly. Whatever you do, do not harass the tenant and change the locks at your own will. You will get arrested for it and get done for harassment if they decide to call the police. It used to work back in the day, but thanks to government laws and all of this stuff, thanks to Labour, thanks to Tories. Oh, by the way, I hope everyone's voted correctly. Anyway, yeah, the point here is if you're doing it yourself, whatever you do, don't harass the tenant and just rely on procedures, which we'll talk about later on anyway. The second way, and it's recommended by me, is to simply use a solicitor who can deal with the whole process for you. It can be a bit more expensive. It can cost up to £1,000 or more to evict a tenant on top of the arrears, but you can always ensure you can claim that money back through adding a CCJ, a county court judgment, on their record. It's unfortunately the one of the pitfalls of this business, but if you focus on sales and growth, things like this won't bother you. I see some people have picked up on my political views, and looks like the majority might be voting for Boris. But let's not turn this webinar into a political vote. Oh, there's Jeremy as well. Okay, fair enough. Could be a coalition. Who knows? Right. Let's crack on. Let's talk about rent to rent, because those guys aren't going to do it for us, right? They can change any legislation they want, but the whole point of a business is you puts you in control. Right, what's next? Slide 12. Yeah. So there you have it. That's the high level view of management tasks or day-to-day management tasks within your property business. Now we're going to move on to the scaling part of your business. There really isn't nothing more complicated about management. Most of it comes with experience, but providing you did what I said, I'll talk about the systemizing part of it in this section and how you can scale it up and turn it into a machine. So let's crack on. So why would you scale up your business? What's the need to do this? Remember this property journey funnel I created from the very first webinar? This was the typical journey a property investor goes through in their career, or mostly what I've been up to for the past 11 years. Now, starting out, maybe the majority of you on this webinar watching this are at the bottom of this funnel, where cash flow is your main objective. Perhaps to get you out of your current employment, maybe, so that you can take up a business full time. However, when you get to the stage of achieving your initial financial goals, perhaps you want to move on to the next logical step whereby you can increase your assets that you own and reinvest your profits to further increase your cash flow. Or perhaps you want to increase the number of rent-to-rent properties in your portfolio so that you have a more healthy cash flow that gives you multiple staff to help out and do the day-to-day management, so you don't have to. Not to the point where it takes you up to 40 hours of your week doing the day-to-day. Or maybe you want to focus on your exit strategy, which we'll go into later. Perhaps you want to get to the point of doing large developments for large sums of profits. Obviously, at this stage, if you have a development project that takes 18 months to 2 years to complete, you know you're not going to receive any of those profits during that time. So hence why you have a cash flowing strategy in the meantime to cover those costs. And that's where rent to rent comes in. So given what I've said so far, here are the reasons as to why you'd want to scale up your rent to rent business in the first place. So firstly, if you want to increase your cash flow, increasing the cash flow will lead you to live a better lifestyle. And of course, once you experience this, it's generally human nature to always want to go to the next best thing anyway. Secondly, perhaps you want to grow your team. You'd want to grow your team because you may find that this is required to handle the demand, perhaps due to the size of your portfolio. Also, you may want to spend time doing other things in life and reduce your time doing the low-level tasks within your business. When you start doing this, you will really start to enjoy waking up to work every single morning. In fact, it's at this point where you have those people who do not, you have those people who don't look forward to Monday mornings, and instead look forward to the weekends. That stops. So you actually look forward to Mondays. It's amazing how it works. When I was working for someone else, I used to dread Mondays, but with the business to where it is now, I absolutely love Mondays, and Fridays are just a bonus. Perhaps you want to move up the property funnel and do bigger and better things, in which case you'll need the headspace to learn a new set of skill sets and need a real manager in your team to oversee the day-to-day management and the staff that you have, which of course reduces your involvement with the help of having a team, so you can focus on other business or other strategies, or even focus on your personal life goals, right? That's why you'd want to be doing this. So now that you know why you want to scale up and have justified the reasoning for this, when do you scale up? Well, you need to have something in place first as your foundations to then be able to scale up and handle the demands of scaling up. Now, if not done properly, scaling up your business can destroy your business. The two biggest mistakes people make are handling the cash flow when it comes to reinvesting to grow their portfolio, but also systems and procedures to be able to handle the demands of a growing portfolio. So the two key mistakes people make are to do with cash flow and systems. It's actually the lack of systems that can consume you, and the term firefighting comes to mind, and your quality of service deteriorates, and your clients will easily come to experience this poor quality. And the last thing you want to do is for your clients to leave you because of that. So let's talk about what systems you need to have in place. Remember, systems doesn't necessarily mean a computer or software. It could be a document, it could be a checklist, a procedure, or a process. That's what a system is. It's also systems and computing as well. But just want to open your eyes to the fact that it's also a procedure, a process. Look at, say, the McDonald's franchise. You can open a McDonald's franchise, and what they do is they'll give you everything you need to know by form of checklist procedures, and notice how every single McDonald's operates in exactly the same way. It's all down to systems. And you don't really see many computers apart from the till, the new McDonald's now have all of the ordering system, the digital ordering system, but yeah, it's all standardized. So the first set of systems you need are your KPIs. These are your key performance indicators. This is where you monitor and measure certain key data in your business to then be able to make better decisions. For example, the cost of maintenance spending is one. Perhaps you're spending too much on maintenance and consistently going over your budget set towards it. And therefore, you need to make a decision on whether it makes sense to have an in-house handyman, because the salary of that handyman will be a cost benefit in comparison to using a contractor. So that's a key demonstration of using a vital piece of information and making a beneficial business change, right? We'll go into details about KPIs later, but you get the idea of how and why KPIs are such a vital piece of data in your business. This is what allows you to grow your business and scale it up. It's these decisions. So let's look at the other one. The next system you need to have in your business is a team, right? A team is a system. It sounds obvious, but what's important is having the right team in place. But more important to that is having the right role fulfilled based on the requirements of the business. For example, when starting out, it won't be too long before your portfolio growth gets to a point where you're spending more time on your day-to-day management rather than the new sales or new business. It's at that point you will then handle the sales and perhaps get a property manager in to handle the day-to-day. Growth then continues full steam ahead. And as demand grows, you can then get another property manager and a second one, a third one, and so on. So I hope that makes sense. Another key system is the operations manual in the business. It's more so related to the systemizing side of things. This is a business Bible in your business that details every single procedure, checklist, and task. Now, I'm not saying that you need to have this ready by day one. It's even our ops manual in our business. It's about 6 years old, and it's ever evolving. And we've got a set procedure where our staff, there's actually a procedure for a procedure, funny enough. So there's a procedure on how to amend a procedure within the ops manual. That's how detailed it is. If you have a staff member that leaves and a new one arrives, knowledge then stays within your business and is not taken away when someone leaves. That's the whole point of an ops manual. It serves as a great training platform for your staff. Furthermore, it adds tons of value onto your business, say if you want to sell it. We'll cover this later when we discuss exit strategy anyway, but it adds so much value to your business. So when you value businesses, business valuations are never just about the income. It's so much more. There isn't a right answer with valuations. So if you watch Dragon's Den, you get so many various valuations, and the dragons always ask the candidates how, the justification or reasoning as to why they valued it at whatever they did. There's no right answer, but if it sounds stupid, they will just dismiss it straight away. But income is one thing, but if you can actually fight your corner by saying it's a business that doesn't work, that works without me, that has an ops manual, it's so much more that you can add. So lastly, you want to have a sales machine in place. Exactly what we covered during the first webinar. You want to have a constant flow of sales in the pipeline where your team report to you of upcoming properties so that you can forecast this into your budget. But this method of consistently bringing in new business needs to be consistent. That's the key word there. The moment that stops, you'll lose complete momentum. So you want to have all of these in place as you think about scaling up. It's in no particular order, but helps massively. Of course, during your business operation, you'll take each of these step by step. So now that we've discussed why would you scale up and when you scale up, let's discuss how you'd scale up. What is it that you need to make decisions? Well, it's all down to KPIs that we mentioned earlier. You'll need to have the following KPIs, guys. You need to have a sales KPIs. You need to have your P&L KPIs. Your P&L is your profit and loss. Various KPIs for your day-to-day management, and also very important is your team KPIs to monitor employee performance. So let's go for each of these in detail. Just what time it is? It's now 7:25. We kind of started a bit later, so I think we're okay on time. But I just want to check in with you guys. How are you guys doing? Does everything sound good so far? I've tried to make this part of the webinar as interesting and exciting as possible. I personally love this part of the business because it's where you see most of the reward. Just comment. Let me know if it's how you guys are doing. I love it. Love it. You could be here all night. Good stuff. Good stuff. Thank you very much. Cool. Let's move on then. I'll come to this. I'll come to that point in a minute. I was just about to say something. I'll come on to it. Okay. So one of the ways you'll be sourcing property is via agents. So you'll want to monitor how many agents you're calling per day, or even per week or per month. So agents called is a specific KPI you want to know. Of those calls, how many viewings are you booking? So you'd want that number ready for you. And for each of these viewings, how many deals are you closing? Vital bits of information. What you will notice is a pattern, a trend, and you'll want to improve on these until you see a more regular trend, a common trend. So how do you scale on that? Well, one thing you'll notice is that for every X amount of calls you make, you'll convert Y properties. Those XYZ properties have a value or is worth something to you, i.e. the monthly cash flow amount, whether that's £1,000 a month, £500 a month. What you're then able to do is say for your goal, if say your goal is to reach a certain revenue amount per year, you can measure exactly what you're doing now and multiply this to get the numbers you desire. It's really as simple as that. You can then justify to hire a salesperson, for example. Do you see now the power of KPIs and how this can scale up the growth of your portfolio? Now, I don't know if you guys watch Apprentice. Now, in Apprentice, yesterday, they were talking about the episode was about the interview stage. And this is where all of those trusted advisors of Lord Sugar kind of go through the business plans of the candidates and scrutinize them. And I can tell you that a lot of the common thing that came up is the fact that nobody was really, really good with their numbers. They never detailed their numbers. And they go and say, oh, I want to have 2,000 branches by year 1, year 2. And the thing is, it's not justified. It's these KPIs that you need to put in place based on actual working examples that will determine how well you're going to do. So everything's measurable. You don't just pick up a number, a finger in the air number. Everything is measurable, and you base your rationale on actual measurements. So see now things are getting interesting, aren't they? Do you see why I now enjoy this part of the business? Because everything is now measurable. It's not a pipe dream anymore. All of a sudden you're thinking, okay, now that I know how many calls I'm making, this is how much I'm converting. How about I just 10x it or 20x it? And it's those decisions that allow you to make good decisions in your business. Rent over. So the next is your P&L KPIs. That's your profit and loss reports every single month. The first thing you need to do is monitor your forecast versus actuals. And what I mean by that is what you predict you will earn. You can do that by knowing exactly what rooms you have, what the incomes are, and actuals are what it says on the tin, what actually happened. So obviously you need to do this for your bank statements for the previous month. Next, you want to monitor your expenses. It's great because you can then monitor the utility usage in your HMOs and thus make changes if needed to better control the energy your tenants are using, or perhaps make a decision to change your energy supplies or to a cheaper tariff. It's very, very important. These are all things that you can do to make your business a lot more leaner. Next is your cash at bank and forecast. You want to know whether you're able to take on one more rent this month or 2 or 3. You don't want to take on a property and not have enough cash at the bank to pay the initial outlay. It doesn't make you look good. So if you had an agent or if you had a salesperson that says, I've just closed 2 deals, you need to ideally set that budget, that target to your staff. So if you've got X amount of income coming in or X amount of cash at bank in, say, January, it's December now, I will go to my staff, say, this is your target, and then they will aim to get that target of rent to rents or whatever they're sourcing. because I know I can have that money to reinvest and pay for those, if that makes sense. Everything is measurable. If you're making a decision on something that hasn't been measured, it's a bad decision. Next is your day-to-day management. Now, there's a lot, but some of the key ones I can give you on this webinar are the following. Firstly, your voids. This is where you can become proactive and have your staff advertise properties and do viewings before it becomes empty. I've already touched base on that. Secondly is inspection. You want to have a record of inspections so that you have an audit of checks done for compliance reasons, i.e. date of when you last tested the fire alarms. Very, really important. Thirdly is your repair spend, which I've already spoken about. Oops. Fourth and lastly, your renewals and arrears, so that you are actively solving problems in your business. You need to ensure you get close to 100% rent roll every month. It's all about ensuring you get maximum profit each month. So that's what you want to monitor on a day-to-day business, within your day-to-day management KPIs. All of this stuff affects your bottom line. All very, very important. And the best thing about it is you want to let your staff know about this as well when you do get around to having staff, because you can show them how much value they are to your company. If they stop working or didn't do their job to the best of their abilities, these KPIs will affect your bottom line. Great motivation for your staff. Next, speaking of teams, is your KPIs to measure your team. You need to ensure you have a training program in place to ensure your team's skill sets are growing. With staff, they want to stay motivated, and the best way of doing that are rewards and progression within the company. The other way of doing that is by having regular appraisals with your staff. And lastly, you want to have a member of management oversee your team. This is now talking about first tier management, where a manager's reporting on these KPIs to you, and you have like a helicopter view of your business. It becomes extremely attractive to investors who may want to buy you out or merge to form one large company. What we do in our business is we have weekly reports that illustrate the numbers that I mentioned, so that we can make better decisions that are based on measurements and not second guessing. All really, really key information. I haven't gone into too much detail because I figured at this stage we'll be running out of time. But if you guys want to talk more about this and learn more, just arrange a call. I'll, again, like I did before, I'll open up some slots for everybody to be able to arrange a call with me. It's completely free. All I want to do is help you guys. So that's scaling up, guys. Next, I want to talk to you about exit strategies. Now, within this, there isn't a large amount to talk about, but I wanted to include this within this webinar because it's vital to any business plan. So let's discuss. So let's talk about what exit strategies are available to you that typical businesses do. Now, most of these also apply to property. So when you purchase a property, you'll always want to have an exit in mind. If you buy a property to flip for a profit, you can then wash your hands with it. Or you might buy a property to add value and then keep it for cash flow, but refinance and release the equity to reinvest again. Or another exit could be you may grow your portfolio and sell your portfolio to a large investor. So let's apply the same to your rent-to-rent business. You may want to keep the business, automate the business as much as possible with first or second level management in place to run the business. This all depends on how much involvement you want in your business later in life. What I mean by first and second level management is where you have a manager and a director, i.e. a CEO, or you could be the CEO, or an operations director, and then a sales manager, maybe a maintenance manager, for example, working underneath. There's a clear hierarchy which clearly states the duties and responsibilities to handle various departments in the business. It's so vital to scaling your business. You may want to sell your business at a certain point. So if so, to get the most value for your business, you want to ensure you have a business that runs without your involvement, meaning an investor will become very attracted to the idea of buying a business that's already running itself. Same reason why if you find a property that's already rented, you might find that attractive because it's turnkey. Same principle. Next is a potential to merge. Maybe you can swallow up your competition, or vice versa if you are looking to retire and take a lump sum for your hard work over the recent years. It could be a 4-year plan, it could be a 5 or even a 10-year plan. It's completely up to you. Now, one thing we've looked at in the past is buying other letting agents. We were very close to we actually put in 2 offers in the past, but it turned out they wanted too much. But it was a great way of reinvesting our profits and growing our portfolio. It's like a sudden surge of growth. And like I said, vice versa, maybe someone could buy your portfolio if you just want to wash your hands with it after a certain number of years. It could be lucrative. Maybe you've done this. Maybe you've built a rent-to-rent business for 4 years or 3 years, and in 3 years, let's just say you've turned it into 7 figures. You could get quite an attractive value for it. Someone might offer you, say, if it's 7 figures, they might even offer you somewhere close to 7 figures. And for me, that might be a good return on investment for 3 years worth of work. I don't think you can get 7 figures anywhere else for doing 3 years worth of work unless you're doing property development. And I'm sure there's other things as well, but just to let you know, just to open your eyes to it. Oh yeah. Another thing that businesses do is they can sell shares to the public and float their company onto the stock exchange. You would usually do this when you need to raise further funds to do something even larger. There's one particular training company that's done that. It took them 4 years to do it, but they're now a PLC company, a public limited company, and it's just a great way of raising funds to then do bigger and better things. This is why it's always good to have your end goal in mind, your exit strategy. So those are the options available to you, but I wanted to give you an insight as to what is achievable and how and where you can take the rent-to-rent property strategy if you treat it as a business. It also makes it much more exciting, but gives you the clarity you need from the start. And that's what I want for my mentees. I don't just want to teach the rent-to-rent strategy. I want to help a small group of people change their life completely. And that's for me, that's where the reward is. I want you to achieve this and join me at the top part of the property funnel that I mentioned earlier. I want to have your business operating based on these 3 machines working for you so that you can move on to the next big and best thing. That's if you really want it. I'm very selective with who I work with, and I really like someone that would commit to this. But for the ones that are working with us, they're very well on their way of doing that. So that's scaling and systemizing. If you're interested in doing this, and it sounds like it's something you have the ambition to do, then look, there's no sell or upsell to this. I just want a simple free 15-minute strategy call with you. If you've got any questions, feel free to take me up on that. What I'll do is I'll quickly send a link on the chat facility so that you can book a call with me. Let me just quickly do that now. I've got a busy day tomorrow of calls. but next week might be good. Okay. I've just sent the link to everybody. If you want to take this opportunity, just click on the link and you can schedule a call with me. I'd love to speak to each and one of you. Some of you I've already spoken to, or some of you have already booked on the call. So it's great to see you guys on this webinar. And what I'll do in the meantime is open up the floor to a live Q&A. If you've got any questions, just go to the chat facility and just type in your questions now. But yeah, otherwise, thank you very much for joining the webinar. I'm not going to end it here. We're still recording. This webinar will be sent out to you. So the replay of this will be sent out to you. It will be on the YouTube channel anyway. But guys, tell me, any questions? And not just about scaling or systemizing, anything, any other webinars that we've done in the past. If you've raised any questions or watched those webinars on replay but didn't have the chance to ask questions, let me know. I've also started a new series called the Ask Kenny episodes on YouTube. So if you've got any questions in future, just find me on Instagram, send me the question, and I'll do a video for the answer to your question. Any questions, guys? Apologies that we ran over. Keep the questions coming in, guys. Can you name any system that you use for your KPIs? Yes. So a system that we use is called Dupix. It's a software that pretty much handles all of the KPIs for us. So it's a system that tells us when an inspection is due. It's a system that tells us when a renewal is due. There are systems out there, guys, that can do all of this stuff for you. When you first start out, it could be that you just use Excel. I know when I first started out, Excel was my best friend. And Excel can do anything you want it to do. If you don't know how to use Excel, as in Microsoft Excel, the best thing to do is you can find someone like a freelancer online and get them to do whatever you want them to create. But if I were you, I would start learning to use Excel. It's not complicated. It can be just as simple as data entry, and it just completely changes the way you see things and control things. Oh, lovely. Loads of questions coming in. So Dupix is one system that I use. There are other systems that you can use for maintenance. So Fixflow is another one, just to throw it out there. It's a system where you can get tenants to report issues to you using an app. It saves them calling you, although they still do call you. So I hope that answers some of your questions. What else would we like? If you could start again, would you use the same strategy? And if so, what would you do differently? Interesting. Good question, Logan. If I could start again, would I use the same strategy? Now, if I started again and I was in the same situation as I was before, when I first started out, yes, I would use the same strategy again. Rent to rent is a strategy where you don't have large amounts of money to invest in to purchase property. There is a way for you to get extra cash flow for not paying 100 grand worth of deposit for a property, or if you're outside of London, I know, Logan, you're in Leicester, it could mean 30 grand. But, with a rent to rent, all you need in London is around £5,000. And that £5,000 will get you somewhere between £500 to £1,000 net cash flow. So if I could start again, would I use the same strategy? Hell yes. And would I do anything differently? Yes, I would do exactly what I'm preaching right now. When I first started, I didn't know everything that I'm doing on these webinars that that I'm showcasing to you guys. It took me that long to figure out that this was the best way to do it. So if I would do anything differently, I would follow that blueprint. Where can you find my first webinar about sales? You're an example of someone that's watching a box set, and you've watched episode 11 without watching episode 1. Oh dear. I'm only joking. Where can you find my first webinar? I don't know if you are part of our subscription list. I don't know whether you've received any emails regarding these webinars. If you have, just look at your junk folder maybe. Worst case scenario, just go, actually, in fact, you should be doing this first. Just go to our YouTube channel. It's called Emily Property London. I will post a link now. So this is our YouTube channel. Feel free to subscribe and just get notified for any new videos. So that's where you'll find the first webinar. All of the webinars on there. This is the fourth, the last of the 4-part series. So you'll find 4 webinars. It's called the webinar mini series. Here's another question: cash flow, assets, and development. So this is, I'm assuming that's referring to the property funnel. So let me see if I can go back to that. There we are. So you're asking, you know about rent to rent, you've heard of rent to rent, but what you'd like to know, if you'd like to know details about deal sourcing and agency, how would those work? Now, if you want to start out as an agency, you can apply the exact same thing you're learning rent to rent, because it's exactly the same. With deal sourcing, I personally feel that if you're deal sourcing anyway, why not take on the properties yourself? If funds aren't available to you, and that's the reason why you're not taking on the properties, I think I've got a call with you tomorrow anyway. I can help. I can stare to see what the issue is. I'd recommend going straight into rent to rent or doing an agency and not deal sourcing. I think deal sourcing is, I don't think you'd have to spend some money anyway on marketing. If you're deal sourcing for an investor, let's just say I was an investor and I had a deal sourcer source me properties, I'd want those properties to be off market. If they were already on Rightmove, what's the point of me paying a sourcing fee if I could go to Rightmove myself and source the deal myself? So in order for you to source off-market deals, you need to spend money on marketing. So that, remember the second webinar, we went through the direct to landlord route. That's what you need to be doing if you're deal sourcing. Hope that makes sense. I would say if you want to go for an agency, great. That's also a good thing. But remember, with an agency, again, you need to do direct to landlord. Whether you offer them rent to rent or you offer them a normal management service or even sales, you still need to go and spend some marketing on them. So Adam, we have a call tomorrow set up. I know, I've seen that in the diary. We'll have a chat about that and we can discuss tomorrow. But for anyone that's sitting on the fence and working out whether they should do deal sourcing, rent to rent, or anything else, do something that gives you regular cash flow. It also depends on your current circumstances as well. How long you anticipate it would take to build a business of £1 million turnover per year? We're probably talking about 10 rent-to-rent properties. You can do 10 rent-to-rent properties in 1 year. It can be as soon as 1 year. There are things that you can't control in life. Things happen, and sometimes you have to take time out. But let's just say you had no distractions. You had all of the funds available to you. Um, I was able to get my first 5 deals within the first 5 months. Uh, but that's because I had no choice. I was really determined to do it, and I really needed to get out of my current situation at that time. So, how long will it take me to do? How long will it take for £1 million turnover per year? Yeah, you're right. It is. It's actually more than 10 rent-to-rent properties, I think. Um, but 10 rent-to-rent properties you can easily do in a year, and one of our mentees was able to achieve 11 in 1 year. So uh, it's possible. Any other questions, guys? Really good questions, by the way. I'll give it another minute. If you do think of a question after, just find me on Instagram and send me a message on Instagram to say this is the question, and I'll put it into my YouTube videos. Oops. Cool. It looks like that's the end of questions. So I'm glad the questions came in, but I'm also happy that there's that the content was enough to hopefully answer your questions as well. I really, really hope you guys enjoyed the whole series. This series was based off our seminars that we do, and we do like 1 day, 2 day seminars, and it's so much content that it's just impossible to all include in one webinar. And that's why we've broken them. We've taken high level key aspects of each kind of each component, and split it out over these webinars. Oh, there's another question. What is buy to lets and title splits? Yeah, buy to let is what you just said. Buy to let, where you take on a property. Well, when I say take on, you buy a property and then you let it out to a single household. A buy to let HMO is where you buy a buy to let and then rent it out to multiple households. Title splits is where you buy a property and split it into various apartments, and then split the deed so that you have like a leasehold and freehold agreement. So if you buy a flat right now in a multi block apartment, uh, it's likely that what you're going to do is actually buy the leasehold of that building for that flat, um, and each flat has its own leasehold. That's what a title split is. It's where you're splitting a building into various leaseholds, and then you can sell each apartment individually for its market value. So that's another way of profiting in developments. So right now we've got a development going on. It's a factory, kind of B1 use, and we're turning it into 7 apartments. Actually, it's a ground up development, so we're demolishing it and building 7 apartments. And then what we're going to do is create a leasehold agreement for each one, and we're going to have a freehold on it, but we're going to sell the lot. I hope that answers your question, Adam. You can also do small house conversion. So you could buy a house, and potentially, if there's scope and size, you could potentially turn it into 2 or 3 flats. Whether you get planning is a different story. Something you need to look into if that's a strategy you want to go into. But that's another way of pulling your money out, getting some profit by selling. It's like a quick flip. Well, if you're doing 2 or 3 apartments, it won't be a quick flip. It'll be quicker than 7 apartments. Awesome. Okay, so if that's the last of the questions, I'd like to thank you all for taking time this evening, and really appreciate you guys joining. Congratulate yourselves. I think spending this, spending your evening to learn is a great thing. It's all about personal development. Like I said, if you want to get in touch, use the link I sent, and look out for the replay if you want to go over this again. But you'll have the opportunity to book a call with me as well. So thank you all. Have a good evening, and I will speak to you soon. If I don't speak to you, then have happy holidays and a very, very, very good new year. Thank you for the kind words, Adam. Thank you. Thanks a lot for the delivery. Such great values for free. You will never fail in your life. Oh, that's appreciated. Bless you. Thank you very much. I will leave it at that and look forward to speaking to you guys shortly. Cheers.